For nearly 80 years, one currency has quietly powered most of the global economy, the US dollar. Oil is priced in it, global trade is settled in it, central banks store it as reserves. But currently, something interesting has started happening. China has begun pushing its own currency, the yen, the yuan, into international trade, energy deals, cross-border payment systems, and strategic partnerships. And that raises a fascinating question. Could China eventually replace the US dollar as the world's primary trade currency? Why the dollar dominates.
Whoever controls the trade currency doesn't just move money, they shape global power.
To understand the question, we first move to understand why the dollar dominates global trade in the trade first place. Because the dollar isn't just a currency, it's an entire financial ecosystem. Global banks rely on dollar liquidity. International contracts are written in dollars. Commodity markets, especially oil, are priced in dollars. And perhaps most importantly, investors trust U.S. financial markets. The trust creates something economics call network effects. The more people who use the dollar, the more useful it becomes, which makes it extremely difficult for any competitor to replace. So why is China trying to challenge that system?
Trade can be negotiated, trust cannot, and trust is what reserve currencies live or die on.
Because currency powers equals geopolitical power. When global trades run through our currency, you gain influence over international finance. The United States can enforce sanctions. It can restrict financial access, and it can shape the rules that govern global banking. China wants an alternative system where it holds more influence. And in recent years, Beijing has started building exactly that. So what tools is China using to expand the yuan internationally? First, energy deals. China has pushed for oil and gas production from countries like Russia and several Middle European suppliers to be settled in yuan instead of dollars. Second, payment system. China creates the cross-border interbank payment system known as CHIPS. It functions as an alternative international payment network. Not a full replacement for SWIFT yet, but potentially the beginning of one. Third, strategic partnerships. Many countries in Asia, Africa, and South America are increasing trade with China, and some of those countries are beginning to experiment with settling with trade in yuan. But even with all those efforts, China still faces a massive challenge. Currency dominance isn't just about trade. It's about trust. Global investors want open facilities, financial markets, transparent legal systems, and confidence that they can move their money freely. Right now, China's financial system still has capital controls, which means the government can restrict how money flows in and out of the country. That reality makes many global investors cautious. Which leads to the next question. Could the world move forward toward a multi-currency system instead? Some economists believe that the more likely outcome, instead of replacing the dollar entirely, we could see several currencies sharing influence: the dollar, the euro, and possibly the yuan. If that kind of system In that kind of system, countries might choose different currencies depending on their political alliances or major trading partners. And while that shift may slowly be beginning, the dollar still holds enormous advantage. Today it represents roughly 60% of global foreign exchange reserves. U.S. Treasury markets remain the deepest and most liquid financial markets on Earth. And during global crisis, investors continue to treat the dollar as a safe haven. Those structural advantages are extremely difficult to replicate. History also shows that global currencies rarely disappear overnight. Before the dollar, the British pound dominated international trade. But that transition took decades. Wars and economic shifts, and major geopolitical changes. Replacing the dollar would likely require similarly massive transformations in the global system. So the real story may not be China replacing the dollar, at least not anytime soon. Instead, China may be trying to reduce the dollar's monopoly, building parallel financial systems, expanding yuan-based trade, and slowly increasing its influence across global markets. Which leaves us with bigger strategic questions. Are we witnessing the early stages of a new financial world order, or simply the limits of China's ability to challenge the existing ones? Because when it comes to global currencies, power doesn't come only from economics. It comes from trust. And trust is the hardest currency of all.